Realtor, lender, lender, realtor, Dallas-Fort Worth real estate.
But not the boring stuff.
Okay, we're going to talk about a trending topic right now on social media regarding real estate. 50-year mortgage.
The 50-year mortgage.
Do you need to bust out your notes?
Oh my gosh.
I'm actually proud of him. He started taking notes.
Here's my talking points I don't forget.
Okay, but I've seen this come out a lot, and there's a lot of mixed feelings about it. And I think people, obviously, you would know more than I would to educate people on what does this mean? Is it something you would recommend? All the stuff.
Yes.
Take over.
So obviously, if you're in real estate or even just on the internet, you've seen lots of stuff about a 50-year mortgage. Now, for me, obviously, if you look from a big financial picture of a 50-year mortgage, people are saying, oh my gosh, you're going to pay 3 times as much interest over the life of the loan, all this crazy stuff. Yeah, if you're looking at it from a financial perspective that way, it's obviously not a good thing.
Yeah.
But this is the thing is, who is going to stay in a 50-year mortgage for 50 years?
I was going to bring that up. So most people, I would be putting you on the spot. If you knew this number, you get a raise.
I know,
you get a raise.
I know what you're going to ask me.
Do you? Okay. What is the percentage of people refinancing once they buy their home?
Okay. So you asked it a little bit question, a little bit different.
Okay.
So 2% of people keep their mortgage for the entire term of their mortgage.
2%.
2%.
Okay.
So what that means basically is people essentially buy houses every 7 years is the national average. People do not stay in their mortgage term for the life of the loan. So everyone's saying, oh my gosh, on a $400,000 loan amount, people are going to pay $1.3 million in interest over 50 years.
Yep.
Well, yeah, if you stay in the loan for 50 years, you're going to.
Yeah.
But the chances of that are basically slim to none.
And this is why I think you should talk to professionals rather than read stuff online, because online, specifically social media, likes to always focus on the negative drama.
Yeah.
And I feel like you're focusing too much on the what ifs, but you're not focusing on the opportunity.
Yeah.
So my first thought when I saw it, I was like, wow, that would have been cool, because then I could get into it, I could afford more up front, and then refi and leverage that home over time.
Exactly.
Like I've done with my properties.
Exactly.
Right?
And that's what's been a little bit surprising to me, because I see a lot of lenders saying, hey, this is bad because look how much interest you're paying, which I understand. I totally understand that. But someone is not going to be paying that for 50 years, right? For me, it's going to be really helpful in getting people into homes, right? When people are saying, oh, this isn't going to help housing affordability. I agree with that. It's not. But what this is going to do is allow for people, for example, a young professional. Let's say someone finishes school and they're living with their parents and they have been working a good job that they got 3 months ago, right? They have a $60,000 a year salary and they make an extra $1,000 or $2,000 a month on bonuses, commissions, whatever. Us as a lender, we cannot use that variable income, right? So if that 21-year-old or 22-year-old wants to buy a house instead of rent, they only, on paper, for guidelines of us, qualify for a $300,000 house.
Right.
But if they can get up to $350,000, they'll buy something that they want to live in.
Right.
So maybe on the debt to income ratio on a 30-year mortgage, they can't quite get to that $350,000. On a 50-year, they can. But we know that they have an extra $1,000 or $2,000 a month in income that they can actually use to pay more on principal and essentially turn that into what you would consider a 30-year loan. And then in 2 years, right, when they have that 2-year variable income, they can refinance.
Right. So what is the verdict? Is it good or bad?
So I personally think it will be helpful for people getting into houses, right? When it comes to housing affordability, I don't think this is the solution. I think obviously, whether it's adjusting loan level pricing adjustments or obviously homeowners insurance being outrageous, I think that would be something a little more beneficial into housing affordability. But this is, I think, a good This is not a replacement. No. This is just an option for people.
I've seen a lot of people refi their 30-year to 15-year, or you can do a 10-year, I think,
right? You can do 10-year.
So I think it's just another tier on top of mortgage.
Yeah.
Right?
Yeah. And
that's how I'm going to look at it. Really.
Yeah. And if people want to get into a house and be homeowners, and that extra $300 a month that they're saving on a 50-year versus a 30-year allows for that, I think it's better than renting.
Right.
So I do think it's a good option. I think the more options that people have, the better.
When does it roll out? officially?
I'm not exactly sure. I don't
Yeah.
know. I don't know the full logistics of it as
Yeah.
well. Like, I don't know what the loan level pricing adjustments look like. I
Yeah.
don't know, if it's government only loans. We don't
Yeah.
know all of that stuff quite yet. But I think at this point, just giving people more options is better.
What we need. So
What we need.
we answered the question. Got it here first.
That's it.
Okay.
Got
Bye.
it here first.